Traders, SageFT from SageFT.com and the live trading desk live on YouTube. What I'd like to do is I would like to talk about today, this Sunday review and Rev-Up. We're going to discuss what happened, how come it turned around, what were the potential reasons, and where we go from there. So first, what happened throughout the week? Well, let's start with this elephant in the room right here. Okay, happy Sunday. Get ready, buckle up. We might have a turning point here. It is plausible. If it doesn't come back and catch traction soon to the long side, longs might have to make a decision in the short to medium term. All right, let's take a look at first. What we're looking at is on the daily chart, we've got the 200 pointing upwards. We've got the 20 pointing upwards, but we're in the middle of it. Okay, therefore we wait. It's in the chop zone. There's no real direction here. Now, counter trend traders, they could be short, but let's talk about where it reversed at. This is the part that we have to understand. What we have here, and I'm going to zoom in, and here's the deal. I'm not going to make videos on this subject because there's several other traders that explain it much better than I do. Now, my interpretation of an order block, okay, which I could be wrong. Okay, it could be this whole thing, depending on what your belief is, right? It could be this whole up move, okay? But what I've been shown that works very, very well is your order block is the highest closing bar. Immediately underneath your order block, you have a fair value gap. Now, what is the significance of this fair value gap? Let's just go through it in my interpretation of why I believe these are important when they retrace. Okay, first off, we are at all-time highs. So any movement after this is what everyone is watching because everyone in the world has their high-to-high trend line from here. So the first thing we notice is there is an inefficiency in the market, meaning there is a sudden lack of demand in relation to the supply. See how over here it's the opposite? But here we have a very, very large deficit of demand in relation to supply. Therefore, we have a lack of liquidity to the demand side. We have buy side liquidity. They have all you can eat. Okay. So what we want to watch for is where's the inefficiency in the market? In this case, a 3-day period, but you're looking at a 3-bar period. Low of this one in relation to the high of this one. And is there a gap in between it on the middle day? And what does it mean? What it means here is there's an imbalance between the demand and the supply. There's clearly less demand than supply here. So what we want to watch is, because the S&P 500 E-mini futures are a very liquid item, what we want to make sure is we have to be paying attention for this if it ever comes back to it. So now let's see if it comes back to it. Now, what does it mean when it fails? Okay, well, what it means is it's completed the efficiency of the market. That hole has been filled. The inefficiency has become efficient. Now what? Well, when we get a large engulfing bar at this location, that tells us be very, very careful on the long side. The significance is lessened only because we're so strong on the KISS chart, on the daily chart. 220, and we were above it nicely. We were about to go into new all-time highs. All of a sudden, we get a large engulfing or outside bar, I guess you could say. It would be an outside bar. And then we get a series of continuation bars all the way down through the inefficiencies on the way back down. Ah, good. Hold that thought. What we want to do, though, is we want to go back into the 4-hour and we want to kind of look at, well, where were we? Ah, I'm glad you asked. Remember last week? Lick, sell side lick, buy side lick, sell side lick, buy side lick, failure. And then it comes to this level here, failure. This is the 4-hour chart, right? So then it consolidates, sucks in more weak longs, and then just dumps right through the 200 simple moving average. Right now, oops, we are actually about to get a position 1 flip on the 4-hour chart. So this is going to be something that we're absolutely going to be watching next week. Let's go to the 15-minute chart. Okay, same thing. Now, what I want to point out is notice the inefficiencies in the market on the way up are getting filled back in. That's an efficient market. That is a liquid market because it has to move down to attract new buyers and flush out old or weak buyers, sellers, I guess we would say. It would create sellers by flushing out weak or old buyers. Okay, now what I want to point out, let's go ahead and go into, there was a trade on Friday that I want to show on the 15-minute chart. And this is what I'm looking at reviewing this weekend in my notes because it was so glaringly obvious. And for some weird reason, I really didn't take advantage of it like I should have. As you all know, I ended down about just over $800 on Friday, which it's part of the game. Cool. Let's go. Now, the trade that I want to review for this week's review and rev up, and then we're going to dive right into what do we think next week's going to happen, is I want to start with the 15-minute KISS chart. Okay. And I want to point out that it is a very, very, very strong move down, position one to the downside. So what I want to do is I want to show last week. We only had 4 days, right? Everything is going fine. Everything looks like it's going to move back into the top side and push higher, and it would be a premium for the longs. But what happened was it became a discount for the shorts. And how do we know that? Let me show you. Because when this thing flips with this sort of vigor, there's no more going long. You're using the 2-minute chart to find bounce short, bounce short, bounce short. Now we're getting to the one that I want to show you. Bounce short, bounce short. All right. Now we're getting to it. Here we go. What we have here is the 200 simple, the 1 SMA or line on close, the 8 EMA, and the 20 SMA. I want to show you in relation to this chart, which is our context. This is our bread and butter. I want to show you this part right here on the candlesticks. Let's bring those in now. Okay. What I want to point out here, early Friday morning, is we have the pivot and Mancini, right? 20, 19, it doesn't matter. It's the same thing. We've got upper Keltner. We've got the 200 simple moving average on the 15-minute chart. I want to remind you that this was pointing down, 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 down. Let me see how far this will stretch out. You can't really see it, but big time down. Here is where all of this starts to come together. We don't need all, we haven't created this part of the equation yet. So let's remove it. Okay, what I want to point out here is, and follow me, do your own research on what I'm about to explain. What we have here is my definition of an order block, highest close on the last sequence. So this would be an order block. Now there's thought that, so all the green bars that lead up to the highest close, okay, that just even builds even more steam for what I'm about to share with you. So if we take this, let's just use this one. Look at this. I want you to notice, and I'm going to zoom in so everyone sees this. May we never miss this ever again. Okay, 200, pivot, upper Keltner, prior order block, I believe this is an FVG. We don't even need to go back because it doesn't matter. Touches it, can't close, can't close, can't close, can't close, flush. Okay, now what? We've got a lot of people asking me, what are the stops? What are the stops? Okay, now watch this. Watch this. This is incredible. And no, yes, I saw it in real time. No, I didn't take it for, I don't even know why. Okay, so now here's how this works. This is, as you all know, if nothing can close above it, it's called in my interpretation, I'm going to call it, and it's called a liquidity sweep. A grab would be they would close it up here and they would do all this weird nonsense and then they would bring it back through little to no follow reversal. That would be a grab. This would be a sweep where it cannot close one tick above there. Okay, so now what do we do here? So what I drew was this. I do believe it had about a 17.75 point stop. It was huge. So what do? Instead of not taking it, you go into the micros. Or you size down. If you have a $300,000 account, you do it with one contract instead of 5, right? If you've got a $50,000 account, you go down to 2 or 3 micros. Because this right here is everything that we dream of. Let's go into the 2-minute chart. Let's start looking at what happens after 10 a.m. Okay, look at your 15-minute. Really start to turn down here. And is absolute slaughter for the sacrificial lamb, right? So here's what it looks like on the 2-minute chart. Remember, we have the KISS chart here, but it turns early. Watch. Look at right here. This turns early. Look at what we have here. Couldn't close. Okay. The same pattern that's on the 15-minute order block, right? And this is now this is an actual order block because this would be the last green bar and the highest close, right? So this is the actual order block. So then here's your FVG because you've got the distance between these 3 bars, this high, this low, this is the middle, this is the inefficiency. They replaced the inefficiency. We can't close it above there, and the rest is all over but the crying. Now watch this, 9:50 a.m. Look. This changes everything because look at what happens. Watch this chart right below me. Watch this. So if you took anything where the 8 EMA comes towards the 20 and then it comes back down, you're just going to take the next red overtakes green or removal box, right? And so let's say we get something like this. Okay, here you go, Street Hero, right? Why don't you take a long? What I'm going to do is I'm going to wait for it to go short right here. Okay, and then I'm going to wait. Maybe take a counter trend with all the profit that I'm going to make here, right? And then I'm going to wait for it to go again. So why do we want to call the bottom? Because that's how we thought that we made money the first time? No, that's not how it works, right? We wait for it to flip back down and we trap the trappers. We remove the removal of the removal. Now, I was going to bring in all the order flow and volume profile and all that stuff, but just very quickly, they're selling the hell out of this thing, folks. We've got skew left, skew left, skew left, skew left, skew left. Right, there's a lot of skew left as it's a perfectly round top. Let's go 15-minute. We could even go 4-hour. I want to show you what I think. Hello. Hi. Here we go. Okay. This to me, we got to go daily. Adam, possible, Eve, double top. All right. So now, what do I think is going to happen moving forward? Okay. The smallest time frame that I'll talk about that is on the 4-hour chart. What I think is because we've gained some traction and we are truly repairing all of the inefficiencies in the move up, I do believe this is plausible. I do believe 5240 is plausible. Does it get there? I have no idea. 160 points lower because we are at its last little leg here of inefficiency. We start to get efficient down here. Last little bit. Now, here's the deal. If this breaks, it's got to remove all the inefficiencies that are left over. I haven't looked at those lately. If we move to the upside, 5,400 is a big level. You can see it. They have inefficiencies here. They're inefficient. Oh, well, we have a gap that could go back because maybe this wasn't efficient enough. Okay, now let's look at what's on the top side. And remember, I'm not thinking the world's going to end. It could. You only win once betting on it, right? So we have to look at not just the downside, which I am starting to get a little bearish. Should I have been bearish up here? Sure. I'm a day trader. What do I care, right? We're just looking at what could happen on a larger time frame. And remember, folks, we have no idea if this could ever even be actionable advice or thoughts or patterns. What we need is our pattern to repeat. Right now, the devastation would be caused. Let me show you the devastation. Okay, there's two different ways. Okay, the first way, the devastation would be just a simple straight move down to 5240 in a day. That would really change the way people look at the market because we have another big red bar, because then you have to ask yourself, is that the exhaustion? For us to go long on the daily chart again, we would need a proof of exhaustion. So if we were to flip, it would have to bull 180 off of this FVG. I don't think it will. I think it'll come down to this FVG. Am I short? No. If we start to pop, where's the pattern repeating? Do you see it? Okay, well, we could say that there's two different types of order blocks, depending on how you want to draw them. Let's draw them both. That way I don't get any hate mail from the minions. Okay, now that we have those established, okay, here is your FVG. Now, I want to show you this. Did this one go higher than the other one? Okay, opening 56.26, 56.56. The high is 69.75, 69. Okay, interesting. Wouldn't this be your breaker block right here? So anywhere around 55.78 to 56.30 is something to watch on the upside. If we just all of a sudden start to reverse, we would be watching to see if they go for a third leg down, because now we can draw. Why did it not give that to me? Hello. Hi. We can draw high to high. I would love to say that I have a perfectly clear picture. Okay, the thought is it's going to extend this break. Okay, that's going to do it for me. This is going to be SageFT from the live trading desk and SageFT.com. Go ahead and check out the website. If you want to find my 100 level trade, it is right there on the website for you. Go ahead and click on the game plan. If you want to watch how I use this information on a daily basis, Monday through Friday, 8 a.m. to noon on YouTube, go ahead and click on the links. I will see everyone tomorrow morning in the live trading desk. Good night.